We had 7 straight sessions of gains on the JSE, so some solid gains, a little bit of profit taking coming through to the market, do you think?
Yes, absolutely. We're seeing that across the board, and we see resources are also down. That's mainly because gold counters and other resource stocks, resource commodities have gone down quite a bit. And then we're also seeing the rand also pull back quite a bit in line with that. The euro also pulled back quite a bit. So yeah, general profit taking all around. People not sure where things are going, and people not willing to extend their investments any longer until there's some kind of direction that comes back into the market. But yes, general profit taking at the moment.
Of course, we saw a flat to negative finish on the Dow Jones last night. Health reform back in the spotlight again in the United States, and of course we know that the United States and Greece are going to be speaking about problems in that country later. So do you think there is a bit more caution also re-entering those markets?
Absolutely, risk aversion has come back. We saw the U.S. Treasury pick up slightly as an alternative to, currencies as well as to equities. So that has pulled back quite a bit in line with just the uncertainty that's surrounding those markets at the moment, and we're seeing that filter through, as I said earlier, into the rest of the markets, and especially yesterday in the Dow Jones. What brought it down was the health sector and any reforms that the president is trying to instill there. And then also earlier, the Prime Minister of Greece also came out saying that any further pullbacks in Greece will be detrimental to the market. And more, I believe, bad news coming out of Greece will be very detrimental to the current market as it stands.
Now, following that week and a half of gains on the JSE, we have the industrial index trading yesterday at an all-time high, and that's despite the oil share being maybe 15% off its highs and resources down by about 20% at this stage. But industrials really have powered ahead over the recent past.
Yes, they certainly have, but then you must just remember that that's where all the major defensive stocks are sitting at the moment, and I think during this times of the market and during what has been happening in the market, people have been trying to climb more into defensive rather than your small cap or your high growth stocks. And we find stocks such as SAB, Shoprite, Truworths, Richmond, Tiger Brands in that index. So we would tend to find that more in there. And also there is no resource component in the industrial 25, and that would help in taking out contaminations from major currency fluctuations as well as resource fluctuations. So yes, it's just really defensive stocks and showing what defensive stocks have done as a representative of South African Inc.
Of course, we had results out this morning from FirstRand, kind of better than some of the results we have seen from the rest of the sector, but really because it's the first half results for that period from July to December. And of course, we know the other 3 large banks did start to show an improvement in the second half of their financial years. How are you viewing the interims from FirstRand?
Yeah, I think the market hasn't reacted very favorably to it, and it also hasn't been so bad. I think they're down about 1.1%, somewhere there at the moment. But yeah, earnings per share rose 1%, profits up 5%, impairments down 13%, which is a good sign because it just shows that the consumer is starting to feel the effect of interest rates cuts, and they're starting to pay off loans, or starting to mitigate their debt and trying to sort out their books. And then also, but I think what's important there is that the full year earnings will depend on what RMB does as a division of FirstRand. And we saw last year, they had major issues in terms of the offshore and proprietary trading losses that they sustained, and also the derivative side. The issues that they had there. But I think as Susan Lasana, the CEO, said earlier, the rebound will depend on what RMB does in the future, and also will depend on what the market does and what the consumers, how much more of their debt and how much more stringent they become with paying off loans. But they are operating in a very subdued economy. They are operating in tough times, as you have seen for all banks. So yeah, not a bad showing, but hopefully some of the expansion projects into Nigeria, Tanzania, Angola, Mozambique, and I believe Zambia will actually assist them in bringing in better profits towards the end of the year.
Because we also had results out from Liberty International this morning, and with those results, news has perhaps overshadowed those is the demerger of the group into 2 separate divisions, splitting the mall and the property and development arm into 2. That's share down close to 4% at this stage, so it looks like the market doesn't like that plan.
No, the market doesn't like that. I mean, I think what the whole point with that Liberty was trying to do is to split them so that at least investors know what kind of stream, the income stream that they're buying into and what kind of risk that they're exposing themselves to. But I think the market, not liking it, just, thinking maybe, the appraisals that they do on the company as one unit versus two split units will be, better for the company. And also, this is their second rights offer. Last year, they raised 878 million, in the sale of two shares for debt, to help with their debt and their property investment, their more property investments. So I think investors just not liking there being always a rejigging of their investments and their portfolio. So I think it was 2.6 down in London the last time I checked, and as you said, 4% or nearly 4% in South Africa. So not a very good showing there.
Of course, if that demerger rather did go ahead, would that share necessarily fall out of the Aussie 40?
I don't know as yet. I haven't really had a look at that, but it will be interesting to find out what would happen there. And that is a risk that they would potentially run at the moment. But it will be very interesting to find out if they do that.